We want to welcome you to the first industry talk about the commodity searches from the International Investment Forum. My name is Julian Desrosiers. I am a financial analyst at GBC AG, and we are co-hosting this event with Apaton. So I have with me the chance to have four CEOs in very different sectors of the commodities. We have Dr. Luisa Moreno, President of Defense Metals. Hi, Luisa. We have from Axiom Group, so a service company in the mining industry, we have Doug Engdahl, CEO. Hi, Doug. Welcome aboard. We have Jack Stock, an old-timer for mainly everyone here will know him, CEO of Globex. Jack, very nice to meet you tonight. And Globex is present in many commodities, so this is very interesting to having on board. And representing the fossil fuel industry, or more the commodity that's related to oil and gas, which I think will be also a big part of this talk tonight, is John Jeffrey, CEO of Saturn Oil and Gas. Hi, John.
Pleasure to be here. Thank you.
All right. So the way we're going to do this is I think at first everyone around maybe don't know every one of you guys and every one of your companies and what you're doing. So why don't we do a little roundtable first, and we start, as you see in the presentation, maybe with you, Luisa, first. So where you're coming from and what is Defense Metal doing?
Right. So Julian, thank you for having us. So my background is actually investment banking, equity research. Before that, I did fundamental research and completed a PhD in material science. And then I moved into investment banking, and I covered strategic materials for a number of years. And following that, I started my own consulting company, consulting to the government, and as well as junior mining companies. So today, I am the president of Defense Metals, and Defense Metals is focused on rare earth minerals, rare earth elements. And so we have a project, the Wachita project in British Columbia, and we believe we are one of the most prospective rare earth projects, definitely in North America, and working towards reaching production as soon as possible to be able to support the emerging EV sector. So thank you again for having me.
Perfect. Welcome, Luisa, and congrats also on the nomination. It's quite new that you are at Defense Metals, and I think they're very lucky to have someone as highly qualified as you to run the show there. I mean, it's very impressive that you're there now. Next company, let's talk with Doug. So Doug, Axiom Group, maybe unknown to more commodities investors, but I guess you're the backbone of what's been going on out there. So let's tell us a little more about your company and where your background is.
Okay. Hi, Julian. Yeah, thanks for having us. Doug Engdahl with the Axiom Group. My background is mining and geology, both in the junior sector and in the producers, from rare earths to base metals to uranium. So Axiom is about 10 years old, but 4 years in its current state. And we're based here in Saskatchewan, Canada. People don't know where that is. It's in the farming belt and in a pretty prolific mining province as well. So yeah, what we are at Axiom Group is we have a environmental and geology exploration, energy services, and geophysics and remote sensing. So we're a technology-focused exploration company serving the exploration industry in Canada and internationally. I think we sit about 100 staff right now.
Perfect. And maybe a little more detail. So where exactly do you do business internationally?
We have had projects all over the world, from the Middle East to Africa to United States. Haven't been too much into South America. A lot of North American projects spanning from the Golden Triangle in BC out to the eastern coast of Newfoundland, and a little bit in Australia. But during COVID times, we really restricted our boots on the ground to Canada, but now we're expanding back out. But we do have a pretty far reach with some of our remote sensing and satellite applications.
Perfect. Well, welcome for tonight. And I think your services could be very helpful for our next CEO, which just released news about properties in Germany. So Jack Stock, CEO of Globex, please. present a little bit of Globex in a few words, as you have hundreds and hundreds of properties out there.
Yeah, Globex is it's a property bank. We have over 200 assets, including 89 royalties. We're interested in basically anything, precious metals, base metals, industrial minerals, specialty metals. And our business model is to acquire assets cheaply, upgrade them, and then do deals with other companies where they pay us for the right to try to earn an interest in our assets. They take on the risk, they take on the dilution and expenditures, and we retain a gross metal royalty. So it's a lower risk type of model. The company only has 55 million shares out. We're on the senior Toronto Stock Exchange, also on a number of exchanges in Germany, including Frankfurt, and the OTCQX International in the US. We generally work in North America, particularly Eastern Canada, a little bit in the US, and one project right now in Saxony, Germany, and we are looking at a couple others. We've made requests for a number of other projects in Europe also.
All right, great. And how long have you been CEO of Globex, Jack?
Too long. About
And so,
40 years.
all right, so we go to maybe our oldest panelist to our youngest one. So John Jeffrey, CEO of Saturn Oil and Gas. That's also exciting to have you. I think we're going to cover a very broad range of companies and commodities and stages of and visions of CEO. So John, a little more about your company and you.
Thank you, Julian. Thrilled to be here today. So Saturn is a growing oil and gas producer in Canada. So Saturn had been a small producing oil company for about 4 years. But within the last year, we took a massive leap forward and acquired an outstanding asset that increased our production by over 2,000%. It completely transformed the company and set us up on a path for growth for the next decade and beyond. We are focused on continuing to expand our oil production in an ethical and environmentally responsible way. As a Canadian company, we value respect for our employees, respect for the land, air, and water in our operating areas. And I'm very appreciative to be here today and look forward to contributing to this outstanding panel.
All right, that's good to hear, John. And maybe just apart from percentages, how many barrels of oil do you produce plus minus per day? What's your projection for this year?
We're going to average just over 8,000 barrels of oil a day this year.
All right, so basically, welcome everyone. Welcome to all the panelists. We've got someone from the junior sector, project and development. We've got a company that has already royalties, already assets and productions, different business model. We have the services industry covered, and we have an oil company in Canada. I mean, this is looking fantastic. So today we're all joining because we wanted to discuss and give our members and all the attendees here a little more insight and a little better vision into understanding what's happening right now in the world, and more specifically, the geopolitical independence of natural resources. I think this is a big concern everywhere. We start hearing that. We heard it in Chile when they decided to say, well, listen, we're going to nationalize maybe copper. We start to hearing it in the United States now. We start to hear it in Europe. This is a recurring theme since about 10, 15 years. But it seems that the geopolitical situation, maybe Russia and Ukraine, has accelerated a bit all of that. And going forward, and one of the things that everyone has noticed from what happens within the past few months is when you go to put gas in your car, it costs a lot more money than it used to only a few months ago. And so, John, maybe on that, as obviously you're an oil specialist on the panel, all of this is basically under one umbrella, which is the energy transition. Everyone wants to move from fossil fuel, from oil, to low carbon economy. So that has been the underlying, calm wave that's been happening, but gathering a lot of speed and momentum. And what we saw with Russia, which is not a big oil producer, actually, that exports, it's very low. Can you explain us a little more what's happening? Is it really what Biden ordered, the unprecedented release of oil reserve, 1 million barrels per day? Is this triggered only because of geopolitical, or is it actually energy transition, and we need a larger production of oil to face that transition more than just the geopolitical events right now?
Well, first off, we applaud the US in joining the European nations and Japan and trying to stabilize global oil prices. It's a positive thing for the energy industry to have stable oil prices. Oil is the current global benchmark for energy pricing. Stability allows for prudent capital decisions to be made. So, stability is rarely the case for oil, is what we're seeing. The last 8 years of mainly low oil prices has just caused a global underinvestment in new oil. So major investments in new oil fields, facilities, mainly pipelines, has been severely constrained. As the economy recovered from COVID-19, energy demands increased quickly, and we realized that the oil demand would outpace our supply in near and long term. So industry experts were calling for $100 oil well before Russia invaded Ukraine. So, to blame this all on the Russia-Ukraine conflict, I just don't think that's accurate. It's estimated that that Russia will be impacted by more than 3 million barrels a day. So Russia is actually quite a big producer. Ukraine's a relatively small one, but Russia, they're saying it's going to be 3 million barrels a day impacted. The strategic reserve release will offset less than a third of that. So when President Biden says he thinks he can replenish that strategic reserve in the future at lower oil price, I say good luck. I just don't think it's going to happen. The energy industry, that energy transition is underway, and higher oil prices will help that. But it'll be measured in decades, not years. Most targets to end fossil fuels are wildly optimistic. They're politically motivated, and they're made for marketing purposes. To get off oil in the next 5 years, 20, 30, whatever it is, it's just not likely going to happen. So the world does not have the right resources available in the near term to facilitate that, and the infrastructure is not there either. What the world needs, the world will need oil for a long time to come. But more importantly, the world needs ethically sourced oil. Oil from countries that support human rights, not enrich their corrupt leaders. Oil from countries that support gender equality, not terrorism. And oil from countries that protect the environment while allowing responsible oil and gas development. In short, the world needs more Canadian oil. And we're building Saturn to fill that role.
I think absolutely no one on this panel will disagree with more Canadian oil, or maybe they will. It's a difficult discussion to have, but I mean, we have a few Canadians on board, so we're always happy when Canadian company can thrive. And on that, John, I think you touch a very interesting point going forward in our conversation. You discussed more specifically, or you gave the example about energy transition infrastructure. I think this is one of the main points here on which everyone is looking at, trying to understand when this infrastructure will be ready. How do we need to get that infrastructure going? And obviously, this needs a lot of metals. It needs a lot of material. It needs a lot of commodity. And that brings us maybe to a second question. Study shows that, and this studies could be wild guessing also at the point we are. I mean, when we're talking about 1.7 trillion that the low carbon world needs in mining investment, it could be 2, 3, it doesn't matter. It's an order of magnitude. And one of the person that can understand and give us our vision on that, I think, Louisa, as you go out and you fight for that capital, you fight for that investment, you fight for those metals that are actually at the center of the low carbon world, if you can tell us how easy is it to attract this capital or not. So basically, do you feel there's enough capital to fund the energy transition? And for also all the attendees, can you tell us what we need as metals for that energy transition?
Right. I think it could be easier than before to raise the capital for the development of these strategic materials, call it battery metals, call it rare earth elements, which are important. Rare earths are important for the permanent magnet motors that are used in electric vehicles, and the battery metals, we know, the lithium, manganese, graphite, and so forth. So what's happening is a lot of the companies, the lithium companies, as well as the rare earth ones, have seen high valuations in the last few years. And I think that is in response, the market sees that there is significant demand coming in. So in 2010, say, the world produced about approximately 100,000 tons of elemental lithium. To phase out combustion engine vehicles completely in the next, call it 20 years, we're going to need to go from, 100,000 to 1 million tons of elemental lithium. And so for the rare earth, which Defense Metals is developing a project, we need to go from 280, 250,000 tons today of total rare earth to 500,000 tons in the next 10 years, just to support the transition, and much more in 20 years. So the demand is enormous, and I understand what John was saying, John Jeffrey was saying, that some of the projections are ambitious, but we're also seeing an accelerated adoption of electric vehicles. We don't know if that can continue, but the world needs enormous volumes of strategic materials, call it lithium or rare earths and so forth. And there is interest from investors. Now, there's a lot of misinformation as well, because these are strategic materials. The development is more in terms of the metallurgy, not so much, it's not like gold. If you have the tonnage, the grade, infrastructure, valuation is rather easier. With strategic materials is different. And so some of the juniors have a harder time attracting funding, but as they advance, it seems that it becomes clearer to investors, the opportunity, and those that, some of them that have seen high evaluations are actually legit. And those are also attracting quite a lot of investment. So I think the investment is there. I think the interest is there. And but it's just a little bit difficult sometimes for investors to differentiate one rare earth company from another. And we at Defense Metals are trying to really educate the market and show why we can be the next, call it MP Materials Alliance, and bring the necessary volume of rare earths to the market.
All right, very interesting answer for sure. And John, you heard it. You have 20 years only. Then that's it. Your business model is done. You can move to another commodity. But obviously, I understand what you mean, Louisa. And as a matter of fact, it's going to take for sure decades to move from fossil fuels into renewable energy. And maybe one of the reasons for that, we have identified a few tonight we're going to discuss, but if there is first enough capital, as we saw what the astonishing amount of money that's needed in the mining world. And maybe if we can ask Doug, you're on the service side of the industry. Do you see a lot more demand from junior companies and from other companies exploring or asking for your services in something else than gold, and something else than silver, and something else? That is there a new metal rush that guys are taking the phone and calling you and asking you to help them?
Yes, Julian. There is. It's an unsustainable demand for support in the exploration industry right now, and I'm sure Jack and Louisa experiences that as well, as they're trying to secure different contractors, whether it be from drilling to geology to you name it. The whole gambit is overrun right now. And then speaking and talk about John about the infrastructure and whatnot, and to make that optimistic transition in that short time frame. Well, you can't even get steel for your diamond drills. You can't get bits. There's a really big backlog. So yeah, there is a huge demand right now.
And that's great, Doug, because that's basically the point I wanted to bring out, is that when we're talking about 1.7 trillion in mining investment, this is just not mining project. All the backbone of the industry, all the service industry, everyone that is producing pieces, everything that is used as a whole needs to also have a massive inflow in capital. And up to now, I don't think we have seen that money come. As Luisa, you said, there's a lot of investor interested. I think there's, on your side, we're a lot of education to do, because it's not an easy commodity as copper to just trade and go on international market. It's all privately exchanged. This is something else we're going to discuss later also, but there's a little point there that obviously it could attract issues. And that brings us again to you, John. So you touched it before, is that basically a higher oil price helps everyone to maybe fund that transition and helps everyone to fast forward that transition.
Yeah, no, absolutely. I mean, economics is just substitution, right? If you increase the price on one, then everyone will migrate to a substitute. But, and that's where I think higher oil price helps us in the short term. But, it helps Doug, Luisa, and Jackie in the long run, because, the higher oil price gets, then there's going to be more demand for electric vehicles. But all that takes time, it takes investment, it takes all that infrastructure that's not in place now. So just in the short term, to just say, listen, we're just going to quit investing in oil and gas and hope that, tomorrow we wake up and everything's electric. It's not realistic, it's not sustainable. It has to be a balanced approach. We need to continue to invest in oil and gas. And what I think countries like Canada and Western countries should be doing that produce clean, ethical oil is, let's take advantage of our reserves. We should be shipping oil all over the world, taking that revenue base that it creates and using that to fund that transition to clean energy. That's a fair and balanced approach that I think that more countries should be adopting. And I just don't think we're seeing it right now.
Absolutely. And more on that, John. I'm living personally on the other side of the ocean in Europe, and lately with Russia threatening to cut the gas to Europe, I heard a lot of people around myself panicking about if yes or no he would do it, what would happen, can we heat our home, can our industries keep on going, and so on. And I think that when you're talking about the decades, about that, when everyone's talking about the transition, we need not to forget that we cannot, it's not a switch we turn off and we turn another one on. Everything needs to go on as planned. And if something we learned from the past 3 years is that the Black Swans event can be a lot more catastrophic than what we thought could be. No one has supplies anymore. We have all moving containers with all the supply parts in it. No one has it. We were in a different business model since a few years. No one wanted to pay to have them, to have in store all of those drill bits and all of that. Everything was coming, ships left, right, all around. It was a very well-oiled machine. And I think that the pandemic and what's happening right now in Europe have really shown that all of that has completely failed us. And it brings us to the next point. So this is exactly what you were saying, Luisa, is that we need a lot more of stuff. Not only we cannot get what we're used to have, but now we need to multiply. We need to think in an order of magnitude that's a lot bigger. So when you were talking also, John, always about that taking decades and so on, where we see here is the total mineral demand is to quadruple by 2050. This is in 28 years. This is not in a year or two, but every mining project takes about 7 to 10 years to develop. So basically, this is a very short time frame to face this demand. We see aluminum, almost 6 million tons more, graphite, 5 million tons. This is numbers that the industry cannot even dream of producing right now. Nickel going to 2.5, copper 1.5, and on the other side, all the rare earth elements, everything basically for EV. We have, again, graphite 500%, lithium 500% almost, cobalt 450. And we still don't know even, all of that is based on technology that we use now, and we don't even know if it's going to be the one used in 2050. So basically, it's a sector in transition. And by being in transition, it should be attractive to younger people, attractive to people who wants to make a good living, who wants to live out of that. And on that, roughly 60,000 mining workers will retire by 2030. And this is people we need to replace. I think this question, I first maybe want to ask Jack, you have projects all over the world, you have royalties, you are joint venturing, you have royalties. And as being our oldest panelist, how do you've been through a few cycles, you see ups and down. How does this cycle compares to the previous one, if we can call it a cycle? But most definitely, how easy is it to replace good employees in key strategic position in a structure?
It's almost impossible. We, for example, are trying to hire a senior geologist and a couple of junior geologists and a tech, and very, very difficult. We succeeded in getting the tech only by outbidding another company. There's a lot of intergovernment company stealing going on, and this is just on the exploration side. On the mining side, already there's shortages, mines that are not working at full capacity, wages are going up. COVID has had a market effect. There's a mine up here that I was told last week that there's about 30% absentee due to COVID. That's on top of the shortage of professional miners. And when you train them, people come and they offer them more money and they go somewhere else. It's just going to be an ongoing problem. And on the high professional side, where engineers and geologists and so on are concerned, we had a 10 or 12 year period where there was nothing going on in our industry and people left the industry and they're not coming back. They've learned other skills, they're doing other things. So we're starting, I'm not going to say zero, but near zero at training people again on these high-end jobs. So it's extremely, extremely difficult situation across the board for the mining industry. And I'm sure the oil industry too, as far as personnel are concerned.
Absolutely. And maybe Doug, if you can say a few words on that. So we just heard Jack and you know, more the professionals, even in office or even geologists on the ground. But again, what about all the support industry? What about all the drillers? What about all the chopper flyer? I mean, pilots. I mean, you need so many different skills and so many different areas. How do you cope with the shortage in manpower?
Yeah, I have an opinion on that, but I bet you Jack's forgotten more than I know due to his time in the industry. So I'll take a stab at it, Julian. But you know, when I see a stat like 60,000 workers will retire by 2030, I got a bit of background in stats, so I always approach it cautiously as an undefined stat, like how many mining workers are there in the world? What number does that? What does that mean? But I guess that's for a different conversation.
Well, hold on, Doug. On that, I can tell you that in the small text, and I think this is the most interesting part, is that LinkedIn has shown a statistic that says that workers in the energy and mining industry have on average been applying for work in other industries more frequently than any other sectors. So basically, even if wages are going higher and so on, a lot of guys are looking for maybe easier work, more at home, more, you know, a little more family and work combination, a little more easy on the body and so on. So there seems to be an issue of mining being hard work, physically.
Ooh. You froze up there.
Yeah,
they go there a few weeks and then they come back. So even though we have to be cautious with the numbers, it's a worldwide problem in every industry. In the trucking industry in the US, it's astonishing. The numbers are so bad. The industry has no clue what to do and so on. But do you feel like just paying them more is what the solution is here, or the industry need to think about new ways of doing business?
Yeah, Julian, I do agree, and that leaving the industry, as Jack said, and learning new skills. You know, the pandemic is something that has brought to light, you know, that work-life balance, and it swung hard the other way. And in our industry, in exploration and mining, you know, you're 3/4 of your life away from home. So, and how do we do that? It's something that we deal with at Axiom here as well. So retention, right? And paying more is not the answer. It's not sustainable. So it's not going to be a long-term solution. So is retention, is answering the bell and providing what they're asking for. Now, like, the 60,000 retiring, stat by 2030. The biggest portion of the risk of this I see is, and Jack could probably reiterate this, is this is probably some senior level mining experienced individuals that their information is not from the digital age, and it's not stored anywhere. So that information, that bank of knowledge and experience, I don't see it transferring unless they join the consultancy world, and they can still have input into the game without being away from home, and they could provide some mentorship in some of the junior sector, junior staff. So yeah, I think the only way to meet this gap right now, other than retaining staff to the industry through answering what their needs are, and that work-life balance is through also through automation and technology as well in the mining sector and exploration. So what took 5 people to do, maybe we could do it with 1 or 2 now, as well through technology.
You're seeing
very
that
interesting.
artificial intelligence now.
Yeah, we do deploy, like even in the mining world, the ore sorting, right? So automation, right? So our metallurgy or extraction processes, like our satellite remote sensing, and at Axiom we do a lot of that, and we have a lot of IP here through artificial intelligence and actually if one knows that world, like deep neural networks, to name a few, because we can't keep doing the way we've been doing it, or else we're going to fail.
Absolutely. And maybe we can ask Luisa. So basically, Luisa, you have a PhD in geology, or am I right? In
Material science.
Yeah, okay.
Uh-oh, he froze again.
He's afraid of you.
I'm not gonna bite. Sorry, you froze for a second.
Okay, sorry. So basically, you did the other way around. You went from highly qualified scientist to investment banking, and then directly into the commodity sector. So what attracted you to take over Defense Metal, for example?
Well, that's very easy, actually. I think it's the best project, out there, period, in the world. From, after covering rare earths for so many years and traveling around the world looking at rare earth projects, this one, when I looked at it, I knew instantly that it was a very good project. But just, answering, the question about qualified people. So rare earth, strategic metals, lithium, and all of these strategic materials, there are not a lot of geologists and metallurgists that actually have experience. So at Defense Metals, we have to tap in folks in their 60s and their 70s and there are only a few of them around the world and outside China that actually understand rare earth. So fortunately for us, it was rather easy to attract them because they can look at the project and be like, yes, this is a good project. But then we have a little bit more of a hard time when we are talking to some of the analysts. Some are geologists, but don't really have a clue about rare earth or even lithium. And so, teaching the market, teaching the analysts, it is a very steep road.
Absolutely. And that brings us, that was a perfect answer, Luisa. It wasn't script, but that brings us to our next point. And this is something that I absolutely wanted to touch on because I got that as a comment from one of the panelists, which I will give, I will let him talk a little more about it. But we see here the map of what's happening in the world as investments, so in which states of projects. And we see that basically there seems to be still a big lack of funding, as we discussed earlier, into the mining spheres, more specifically into the exploration phase. But when discussing before with Jack, I think, Jack, you said something very interesting. We don't lack money in mining. There's been always enough money, or there will always be. But we're lacking, and that's what you said, Luisa, that's what they poach you from your industry to ours. We're lacking good projects. So what about going back to the basis, more local exploration? All that in the idea here that we try to bring more independence from China, independence from other countries, and have a little more sovereignty into our transition metals. So Jack, maybe if you can, I think you're the leading experts on exploration all over the world and all of those. So what's your idea on that?
You want to go back one slide? The thing that pops up about this slide is, if you look at it, we're talking about expiration. So basically the red part of the circles. And if you look at the North American exploration dollars is more, if these numbers are correct, than all the others combined. Now, why is that?
Exactly.
That is because North America is a democracy. That is because there is rule of law. Now, there's expenditures in other parts of the world, but your money's at risk. So people are willing to invest in democracies and in rule of law. Look at what happened to Centera in Kyrgyzstan.
Yeah.
The government went in over the years, kept taking more and more, ended up taking 20-some percentage of the company, and then just said, screw this, we're taking the whole mine.
Yeah.
Right? And this is small part of what's going on. And it's not only corruption of government, it's also the environmental processes, because there's legitimate environmental concern. And then there's the largest screaming voice has an effect and causes projects to stop. And that's true in the oil industry, and it's true in the mining industry. So there's not a lack of projects. There are fabulous projects all over the world. What's happened is that the people don't want to spend money in places that are not democratic. They don't want to risk their money. Where places that are not democratic, and places that are where if you do find something, even if they were, which a lot of them aren't, but even if they were, it's the society is going to generate because of the influx of the money. If you look at Nigeria, for example, in the 60s, 100% of their exports was 10 products. Now, 97% of their export is oil. And that's created political instability. And you see it all over the world, where once there's a lot of money there, the various parties start fighting. And it creates, again, a place where you don't want to spend your money. So it's not a lack of projects. There's tremendous potential all over the bloody place. It's lack of, I'm going a little bit off kilter a bit, but it's a lack of surety of ownership, of the ability to do work. Even in a democratic country, like, for example, Canada, when Alberta wanted to push gas across to the refinery in New Brunswick, and Quebec stopped it because they weren't getting enough jobs out of it. It was actually just a political move. So even in democracies, there's problems. So anyway, it's not a lack of projects.
No, but I think it's very interesting, because what you're saying is that what we're seeing from this map is that there's actually a lot of capital flowing into North America. When we're talking about mineral independence, basically we're talking about a European and a North American view on it. And what you're saying is that naturally, this is the next evolution step because of everything that has been happening in China, in Middle East, in South America. I mean, when you discussed about oil and lithium, well, in South America, they want lithium. They don't know what they really want to with it. They want copper, but they don't want copper, but they want to produce copper without producing copper. So that you're producing oil, or that you're in the mining trying to mine more for the EV transition, what we've been discussing since the beginning, you're stuck and facing the same problems. If you're not doing it in a very stable democracy, issues can come down, and people don't like to put their money where there's such high political risk.
And remember, it's also all interconnected. I mean, the fact that you want to make lithium batteries, well, lithium's not the only thing that goes into a lithium battery. And then you have to have the copper wiring. okay? And then you have to have the products to make if you want to be green, you want to make solar panels, you want to make windmills, you want to do whatever you want to do. There's a whole chain of products that have to be acquired in order to come up with and make the lithium battery work. Okay, so it's not one thing.
Absolutely.
And anywhere along that line, you get one break, excuse my language, but you're screwed.
No doubt about that. I think you're absolutely right on that. And this is exactly, I think that this is what we've been touching a lot. We've been touching a lot about what does it need to be independent? What does it need, for example, for Canada? Because we saw big news from the Canadian government today or yesterday, $2 billion to fund the energy transition. We saw big news from the US also, nonstop since a week or 10 days, about funding critical metals, about funding all of that, about bringing back all of those metal exploration and exploitation into Canada and into US to be able to produce their own cars, to be able to, make the energy transition, produce their own solar panel, windmill, whatever it needs to all of that, the entire grid, so the small grids, batteries for the grids, and everything that's supposedly coming within the next decade or so. And what you're touching is very interesting and leads me to the next question, or maybe just before that, Doug, on that exploration on so you worked internationally, you have you're sending teams all over town. We saw the previous slide, maybe I will go back to it. We got to see previous, do you feel that those numbers are somehow in the good magnitude? Do you see a lot of exploration being happening in North America, maybe compared to other regions?
Yeah, I do. I echo what Jack said there as well. Yeah, and those stats, like to get into a little bit deeper to have a more educated opinion on it when we're looking at it, but I do. So it's not a lack of good projects. Yeah, a lot of the low-hanging fruit has been picked, right? So improving our exploration methods, but also we talk about, Jack, you said the total dollars spent in North America for exploration exceeds them all on a quick glance on this slide. Well, like there's things we can do in our country where most of the dollars are spent, or in our continent, like on this, and I bet you Louisa and Jack would reiterate this, is that our permitting process, like allowing exploration programs to move forward without unnecessary hurdles. It's an astronomical amount of dollars that aren't even able to allocate in because we're held up by certain government processes in our permitting. And is that due to a lack of staff or efficient systems? Yeah, I think both. So, and then the other component of this is we're being really reactive and in our to the commodity prices as opposed to proactive. So if we keep like these great projects that Jack said, there's a lot of great projects out there, but when the need goes down and the commodity price drops and there's no money, these companies fail. They start over again and start over again. So the advancement of them is a really slow process. So if there is more government incentives or tax incentives or whatnot to keep going when the commodity prices are at a low, I think that would really keep things moving forward and not being reactive to the industry.
So if I hear you correctly, I think that one of the main points you and Jack are pointing out here, and John discussed a bit about it earlier, but apart from signing or making big headlines, government have to look at what they're doing themselves, at being more efficient, and how they can support the industry moving forward, rather than taking all the responsibilities and saying, hey, mining industry, that's all yours. Make sure the energy transition happen. And so you discussed, Doug, maybe that the government should be more efficient into, for example, permitting and exploration rights and fast forwarding the process. But also you touched about something important that has been a problem in the mining industry, is that it's a cyclical business. Price goes up, price goes down. Right now it's exciting, everyone excited. Nickel price all-time high because of LME problem, but still 100,000 a ton. Copper price highest, iron ore highest, gold is very high. all across the board. Oil, John, is very high. Rare earth, let's not even discuss it. I mean, this is skyrocketing. Lithium is skyrocketing. No one knows exactly how to trade those commodities. And this is part of the education process, Louisa, obviously, of a lot of people that has to be done out there and investors. But how do you feel the government is backing your industry? I mean, Louisa, you are in the hot commodity. You are exactly with it where all the governments are saying, we love you, we want to produce. Do they pick up the phone when you call?
No. And but there's a lot of talk, so it's an election year in Ontario, so you see a lot of talk. So I think they're starting to look at it more seriously, especially when you look at the supply chain for the automotive industry in Ontario, in Canada. And so if we are not careful, we will have to start buying batteries, for instance, from the US. So I think the government of Canada is taking that very seriously, and they are looking at upstream, at the miners and then exploration, but the dollars are not flowing yet, and so it's a wait and see. But as you said, I think Doug said, it's the reactive. It's always, even the government, it's reacting to deficits in the supply of these materials and the high prices, and they're starting to panic that we are still dependent on China for all of these materials. So it's a wait and see, but the government is talking, but not really supporting much. And it is not just cash, permitting is everything. So there's definitely more that can be done.
I think this graph kind of shows that perfectly, and it echoes what Jack and Doug have been saying, as well as Louise, is you can see, companies want to spend money, they want to explore in good, stable governments, which is why you see such a high exploration amount here. But I think with the permitting, the government regulation, and the timing, I think all that feeds into that cyclical nature, which is why, like, if you look at US and Canada, we spend the most on exploration because there's lots of great projects. The reason we're doing so much is because we know where the ore is, much like oil and gas. We know there's oil and gas there. I mean, Germany has lots of gas that they can develop. But when they get around to construction, we spend the least amount of construction. So we know it's there, we've identified it, but by the time we can get it through government and get it online and operational, we spend so little on that just because of the permitting and the red tape and everything that goes behind it. So, the exploration companies, Doug and his guys, Jack, they're finding these projects, but to actually be able to turn them on so Louisa and her companies can exploit, that's the issue. And that's why I think companies like that, they go overseas and they go to less desirable countries just because they can get projects done there, and here we can't. Energy East, Keystone, all these pipelines, as it pertains to oil and gas, but as it pertains to mining, on average, there's one new mine that comes online in Canada a year for all these exploration dollars. Like that's not efficient. I think that's one of the issues that I see in all this, at least.
I think this is very interesting, John. Without a doubt, this is a good view on the problem. And as Jack was focusing on the exploration dollars, you looked at the construction dollars, and I think that this is the big fail that's happening right now. And I think one of the only reasons for that is mainly, as you were saying, government red tape and so on, and the long process and how to go green by going green. I mean, if we want an energy transition, we need metals. If we need metals, we need mining. If we need mining, we need to dig a hole. I mean, at one point we cannot, we don't still dig out of space or so on. It has to come from the crust. It has to come from where we walk. And we are in Canada, obviously North America, very fortunate to be able to do so far away from cities, far away from region, where actually red tape should go a lot faster because a lot of implications could be a lot lower. If you look at Labrador in the east of Canada, iron coming from there, there's absolutely no one almost living there. You've got the communities, obviously, First Nation and so on issue, but those actually are manageable. But obviously government needs to take their part, and it needs to take their part fast, because as we see here in the next slide, everything is from China. So we're going to have to decide as nations very soon in that EV transition where exactly we want to situate ourselves, exactly how we want that to happen, and the role of each and every stakeholder in there. And I think that you guys, as pointed out, there's obviously a government that has a big part of the stick there. They're a major stakeholder in that, and to be able to fast forward that, from subsidiaries, from cutting red tape of what I hear from you guys, from helping giving more money for the downtime. If for example the lithium crash tomorrow morning, should we stop all lithium projects all over the world? No, we should not. We should help those companies move forward and continue that EV transition, and continue helping companies like yours, Doug, so that they can keep their employees, not having them jump over to the next industry because somehow there's a downturn in the metal price for a while, and so on. But this is still the big part of what we were discussing today, of what we were looking at more specifically, is how we can cut our ties to this graph, which is honestly difficult to look at, coming from North America, personally, knowing how much ore we have in the ground, and that we have all those commodities. They're all absolutely ready to be picked up. They're being explored. And as you said, John, there's a big problem about bringing them online. So maybe one last thing on that, and we're going to be, Doug, go ahead.
Yeah, and just going to go back to what Jack said, and it ties in, with both John and Louisa. So I also sit on the Critical Minerals Council of Canada, and I don't think, I don't think they know like the full mine to market, right? So Jack says that's great, we're independent, we can pull lithium out, we can support all the lithium production we want, right? But so what about the processing? What about the other steps that tie in? So great, we've got all the mines, we have everything we need, but now we can't actually put it into production, not mining production, but use of that mineral, that whatever it may be. Now we're reliant on, say, the enrichment of uranium in Russia or whatever. So we're still not independent. We're still at risk. So I don't think the industry, I don't think the government, I don't think anyone really understands, with a handful of a few people, the complete mine to market and what that means.
And the same is true for John, is exactly what he was talking about. We have all the oil, we have all the gas, we don't have the pipelines. So we're selling oil to the US at a discount in order just to sell it, which is crazy. We should be shooting it to the East Coast and the West Coast for our own use and for export, period. And we got to take the politics out of these decisions, whether it's politics based on a local need or whether it's based on the environmental considerations or who screams the loudest. We got to get rid of that and deal with things in a rational, sensible, economic, end game basis that is the best for the people of the country.
Cannot agree more. And I think on that, we're coming almost to close. It's 7:54. We have still 6 minutes to go. And I would like to leave you, have a closing comments, every one of you, one after the other, if you want, maybe starting with Jack. So we see that map right now. This is how the metal and minerals trade flow were going 2020. And we see again the dependency on China. This is absolutely tremendous. Do you think we do have the money, the projects, the people? Do we have everything Jack it needs to change how this map looks? And as Doug said earlier, not just only on the mining side, but all the way in all the stakeholders, all the way to market.
Well, first of all, I have no bloody idea. So the thing is, you have to look at all the different things that are going on and can go on. For example, this is the first time in recent history that a major world economic power has had cross-the-board sanctions put on it. It's a huge game changer for us. What is it? Between 2016 2020, 34 million pounds of uranium came from Russia, Kazakhstan, and Uzbekistan, right? Well, now that's cut out of the picture. How do we adjust? We're not going to adjust that tomorrow, okay? So I don't think anybody really knows what that map is going to look like. It's going to depend on, to a large degree, politics, laws, environmental pressures, whether reasonable or unreasonable. So that map is, absolutely no bloody idea.
Well, looking at the portfolio of companies that Globex have all over the world, I think that a little change in that and a little more in North America and so on would not hurt Globex, would help you push forward. You have over 45 projects involving copper, for example, in your that you list on your website, and so obviously that would be very beneficial for Globex. But as you said, I think it's very difficult to try to predict how it's going to look in the future. But mainly, Doug, if you can pick up on that, and what's your view on the next 10 years?
I think we can all say what we think it needs to look like, but I'm with Jack. I have no idea what it's going to look like. So you do look at that map, and you look at some countries, some continents that are more independent than others, and I don't know the reason for that. But I could only assume the big swoop from Australia to China there you see is due to a lot of Olympic Dam and a lot of other big projects like that. So unless we're going to be able to not respond to, say, China turning the dial up or down, that affects the commodity prices like rare earths, where they forever they've controlled 95% or so of every processed rare earth coming through. I think we're at the mercy of our local governments to see what that's going to look like, and that changes every 4 years. So I'm with Jack. I really don't know what that will look like. But I do know that we need to create a little bit more independence and reliance on stable countries, and not be buying our oil from unstable countries that don't align with our ESG initiatives, and rely on Canadian oil and other commodities.
Absolutely. And Louisa?
Yeah, it is difficult, definitely to forecast. I would love to see this graph just focus on some of the strategic materials. So if we were to just focus on the battery metals and rare earths, we probably will see that China is the top importer and the top exporter as well. It would be a much worse graph. And so again, it's easier to say what should happen, which is to see a more diversification. Eventually, China is probably likely to continue to import more and more if we don't develop our own supply chain. There's a lot of concerns about the environment and people. I get questions like that. Oh, rare earth processing is dirty. No, not necessarily. It doesn't have to be. We can today in the 21st century. We can definitely process minerals in a sustainable way. It's definitely difficult to compete with countries that are not following the same standards, but it is possible to do it. And we need the market and the government support to do that and to change it.
Absolutely. John, closing words?
Yeah, I just think it's funny that, with this conflict in Russia, everyone says, well, we need to get off oil and gas and start the transition to a clean environment. But you can see that we're just trading one regime for another. So now we're just going to rely on China for our rare earths instead of oil and gas from Russia. So I'm not sure that that's an improvement. Now, on the other side of things with demand, India is 10 to 15 years behind China. So what does that look like for a consumer? Like, is there enough rare earths around? Everyone says oil is finite. We have to make the transition at some point, but so are rare earths, so are batteries, so are all these things. In Western nations, we care where our clothes come from. We care where our coffee beans come from. We care that everything we have is ethically sourced, except for things like metals and oils, that things that have the biggest impact on the world. So the sooner that, Western nations kind of wake up and start realizing, as soon as they start caring where their batteries are made and where their oil comes from and these things, until that starts to happen, I think we're just going to keep trading regime for regime. But if we can actually get behind that and we can stop just exporting that pollution, and we can actually develop our own resources in that clean, ethical way, I'm not sure what it's going to look like. But hopefully the governments get behind that, because I want to see all these companies on the panel are doing the right things in the right way in the right places. So I want to see more of it.
Well, those are great closing words, John. And this is how we're going to end our first industry talk from the IIF International Investment Forum. commodity shortage, geopolitical independence of natural resources. Again, I want to thank all attendees who came in, who joined at the beginning or at the end. We have to give a big thanks to our panelists, Dr. Luisa Moreno, President of Defense Metals. I encourage you to go on the website, get more information, see how they can help in that energy transition, and obviously help in the independence of natural resources. Doug Engel, CEO, Axiom Group. You guys are doing the backbone. You're an absolute necessity in the industry. And I hope the upcoming challenges are going to be able to be faced with the higher commodity price and help you get more workers, get more jobs done, and help more companies in the open. Jack, Globex, Jack Stock CEO, Globex, how many properties in total you have? 150, so on?
205.
285 properties. Go on the website.
Yeah.
Sorry?
205.
205. Okay, go on the website, check them. They have on about almost all commodities there is out there, and they're doing very, very well right now. John Jeffries, CEO, Saturn Oil and Gas. Thank you for giving us kind of a bit of the other side of the energy transition, from where we have to go to maybe where we're going. And on your closing words, and I think that one thing that we can maybe take for the next industry talk is obviously ESG, how green we want that to be, and how ESG can go into the commodity and help every project grow. So I ask all attendees, if you want, go on our website, International Investment Forum, and look, we have our next conference on the 19th of May. So once again, thank you everyone, and have a good day, afternoon, or evening.
Thank you.
Thanks, Julian.
Take care.
Thank you.
Bye-bye.
Bye.